be an advocate is to have courage, independence, and passion for the things that matter. And so hopefully we can bring that passion, even in this very short conversation. But clearly, things matter in the capital market in terms of its impact and its role in driving change in this country. So I'm going to open up by just allowing Mr. Taiwo Idele to share some high-level thoughts. Like I mentioned, we're really not going to have much time to engage with the audience. But please, on this point about advocacy, I just wanted you to just give us your perspective.
Thank you very much. So unfortunately, we did not have the opportunity to make the presentation, but I'll tell you a story and I'll answer your question.
Sure.
I know people are hungry, but I'll tell you a story. Hopefully that will give you some energy. And the story is the story of a beautiful and intelligent lady, ready for courtship with conditions, very global and internationally mobile. She's not limited by boundaries. She prioritizes being in the right environment over patriotism. She's hardworking and willing to take calculated risk. Something special about her. She's loved and desired by 195 potentially eligible men. To attract her, you need to demonstrate 3 important attributes. Number 1, sincere care and love, not hostility. Number 2, ability to provide safety and predictability, not instability and chaos. Number 3, sustained attention and consistency, not random thoughts, not complete neglect. This beautiful lady is moved by, it's not moved by intentions, but deeds. Remember, she has a choice and plenty of choices for that matter. She's forever young and beautiful. She doesn't believe in together till death do us part. So you have to be intentional to attract and keep her. And if you did, she produces her likes, brings with her prosperity, abundant wealth, as well as huge influence that will make any man who is able to attract and keep her the absolute envy of all the other men. Ladies and gentlemen, this beautiful lady is capital and investment. The men are the countries of the world, of which Nigeria is only one. With that, my short story, I'll spend maybe 1 or 2 minutes to just speak to the policy advocacy aspect of it. Now, policy actually means more than just policy, the way we use it loosely. It means laws, it means regulations, it means taxes, incentives, and so on and so forth. We have to recognize that we have made progress as a country in terms of what's working, good corporate governance design, the changes through CAMA 2020, the Finance Act, some incentives. But I have to say also that we have a long list of incentives, including those applicable to the capital market, but they have low impact. And I'll tell you what it is. We used to have VAT exemption on capital market transactions, right? But you know what it translates to? If you wanted to invest 1 million naira, you get a savings of less than 1,500 naira because of that exemption. That's 0.15%. I don't see anyone who says 1.5 is the most important thing when they're investing 1 million naira. Whereas we have bigger tax issues. So today we have exemption for capital gains on the stock market, but we're not making gains. We're making losses, but we don't get a deduction for it. What you find in competing and robust capital markets is they give you a deduction for when you're making losses. That reduces my risk as an investment. We don't have it in Nigeria. It's also the reason why we're unable, one of the reasons why we're unable to attract many headquarter companies. We have the African Continental Free Trade Area now, right? And Nigeria needs to position itself to be the preferred exchange in Africa so we can be the hub to host investment in Africa for Africa and to the rest of the world. We cannot afford to miss this opportunity. If you look at it today, our effective tax rates for companies listed on the stock market in Nigeria is one of the top 10 in the world, highest rates. 30% corporate income tax, 2% education tax. When you pay the dividend that is left, there's a 10% withholding tax. That's effectively about 39%. We are top 10 in the world for highest tax rate. You cannot attract headquarter companies with these kind of policies. We don't have group taxation policies. By the way, even the unicorns we've been able to produce, if you Google Andela today, it says it's an American company, right? Remember the story of the beautiful lady? She's not patriotic, right? She's looking for the right environment over patriotism. HSBC wasn't a European company, right? There's no reason why MTN, instead of listing in Nigeria, there's no reason why we should not have a target for MTN to become a Nigerian company with operations in South Africa, right? So we need to be very intentional. So we have, apart from, most times we spend time on incentives, but I say, let's even remove the disincentives. And I'm glad that we have the National Assembly here. Unfortunately, we're having to rush this session, right? So today, the National Assembly, for some strange reasons, have a template for every law and establishment that they enact. And those laws have a clause that says companies must pay a percentage of their revenue, a percentage of profit to some funds. If you allow me to make a list, I'll spend minutes, but just mention a few. From tertiary education tax we've had for so long, many of us would admit that one is useful. You have information technology tax. They already passed a bill recently. It's called Tertiary Healthcare Fund. There's a police trust fund. All of these funds have percentages for companies to contribute. Add it on top of what I told you already about the almost 40% effective tax rate, we cannot be competitive. Yeah. So I know that you're trying to remind me of my time, but I think that I may not have the opportunity to speak again.
True.
Right. So yeah, so if you just give me 1 minute. So Nigeria government, the president has, this government has an objective to lift out 100 million people out of poverty. Actually, one of the fastest ways to accomplish that is to have a thriving capital market. Not only would everybody be able to invest and create wealth, government can generate revenue. Listed companies are more tax compliant. Some reports have it that Elon Musk will be paying about $15 billion in taxes just because his share options have crystallized. Imagine $15 billion is more than the revenue we're expecting for the federal government for this year. My final thoughts on this, that's just one person. My final thought is that not only do we need to increase the market capitalization to GDP ratio, we need to also improve on our say to do ratio. We say a lot, we do very little. If there's anything that is lower than our tax to GDP ratio, it is our say to do ratio. Thank you very much.
So thank you so much, Taiwo, for your thoughts. But let's go to the SEC. So we can put you a bit on the hot seat now, because to a large extent, regulators really drive the agenda. The market is regulated, so you set the rules. And I just wanted to, maybe if you can just reflect on one of the new rules, so to speak, that the SEC is bringing out, and that's relating to crowdfunding. Earlier, Taiwo mentioned about low impact regulations. So let's hear your thinking around this and where it's going.
Okay, thank you very much, Wole. Listening to several presentations that has come before now, when it comes to regulation and law, for a regulator, you have a delicate balance. That's speed and diligence that you always have to bear in mind So you, as much as you want to develop a market, you want to regulate the market. If you overregulate, there will be no development. At some point, if you overregulate, the development will even disappear because it has to keep progressing. Now, coming back to crowdfunding, now it's not just crowdfunding alone. I mean, 5 years ago, 10 years ago, the roles fintechs play now in the financial services sector wasn't as prominent. Now, if you let it go unbridled, it could create unintended consequences, which has dire implications for the economy. Now, crowdfunding, when we created the crowdfunding rules, I think we came about it earlier this year in January. What we saw was an increased appetite for, should I say, peer-to-peer transactions. So someone starts off a company, calls a group of people, they invest, and it was increasing. But there is should I say, an alternative opportunity to that. It could be taken advantage of. Now, all this business, and we said, okay, if you're a crowdfunding platform, you could raise money. Let's put the burden of the diligence on you. You create a platform, we regulate you, the platform creator or the crowdfunding platform, then you can amass people. So then you will have the burden of knowing the business you're recruiting capital on behalf of. We have the data of the SEC to monitor and just to make sure on a timely basis, without any unscrupulous activity that could be ongoing. I think it would be a good opportunity to just delve into an area that has been much talked about in recent times. That's for fintechs.
Sure.
Now, fintechs, the power and the ability for them to solve a lot of problems, it's unequivocal, it's non-contestable. Again, there's a much popular statistic that in the collective investment baskets, that's the mutual fund, I think since we've been at this game for about 17 years, we have still less than 500,000 people. Fintechs, the top 4 of them, within 18 months, they have in excess of 400,000. And and if you look at the demography, I'm sure if time permits, probably Jalo will speak to that, on the demography and how we want to change the paradigm. A lot of the younger people, which we thought were so unemployed, there's no money to invest, the propensity to invest is so low. But check our statistic on the league table of fintechs and Bitcoin purchases where Nigeria is. Look at the demography of people that are going into there. They are mostly youth. So where did the money come from? Not from the sky. It's definitely here. So I'll leave it here now, but let's just bear it in mind. As a regulator, you have a delicate balance to maintain, speed and diligence. Right. Thank you very much.
Thank you. Still staying with regulation, I want to go now to Mr. Nadiawe. And you also can give us some high-level thoughts on this point about regulation, because, and maybe even beyond just regulation by the regulator, in this case, for example, the SEC, but even the National Assembly, lawmaking, how that could impact the recovery of the capital market in your view?
So I think one of the things, we are a market regulator and we get a lot of information from the entities. And I think one of the greatest things that we're always being told is conflicting or just inconsistent regulation across different regulators. So I think if we want to get the market right, it's very, very important that regulators sit together on a regular basis and try and eliminate those areas of conflict. Now, even when the issues are not conflicting, there's also the burden of having to comply with so many different types of regulation. So a good example is practically all the regulators need financial statements. So why do you have to submit financial statements to all the different regulators? If we can use technology to get all the regulators to pick up the financial statements through technology in one place, or if they're looking for different things, to come together, again, using technology to figure out what it is that they need from those financial statements, you can have the same financial statements, the same technology, and use it, and everybody's happy. And that way you ease the burden of regulation. so that when people are looking at regulators, they're looking at you as an enabler. And once they look at technology as a regulator as an enabler, they are willing to engage with the regulator. What you find now is there's a sometimes like a cat and mouse game. I want to talk to you, but I don't really want to tell you everything. And that goes to the point that the executive commissioner said about the diligence. You want to be diligent. And so sometimes when folks are coming to speak to you, you want to actually ensure that they're telling you everything you should know. One of the ways of ensuring they're telling you everything you should know is if they feel that when they talk to you, you're not just going to clamp down, you're actually going to listen. So it takes me to the next point about regulators having to have a listening ear. And these things are not rocket science. They're done in other countries. So I think we need to really try regulators coming together, using technology and having a listening ear. You asked me about the National Assembly. I think, the point that Taiwo has made about the laws that come out, the lawmaking process is unfortunately too slow. So we're very happy for CAMA 2020. But really, CAMA 2020 is like 25 years too late. Evidence Act 2010, 2011 was too late. So how many, we need to play catch up, and it takes too long and it's too expensive.
Right.
And there are too many interests being, having to be catered for in the different things. We have the Investment and Securities Act, is a 2007 act. And I'm aware of at least about 4 or 5 initiatives to amend the act. Each of them, unfortunately, not successful, but a lot of work being done by the community to get it done. Hopefully this last week, the current one will be successful, but we have to, stop talking about it. The do and talk ratio on laws has to change. Thank you.
Thank you. So now let's take it to the various, should I say, investor base or interest groups, so to speak. And let's talk a bit about the retail investors. And Jalo, I'll come to you now, and maybe you can just reflect on this. Technology obviously is a big part of the future. In fact, many will say it is now. And I want to hear your thoughts about how we can advocate for, should I say, better adoption of technology to make a difference in terms of how retail investors can be part of this market.
Advocacy requires courage. I'm not sure that I'm courageous enough to answer that question directly. I will attempt to.
Do your best, indeed.
So I met a gentleman, young guy. Then he was 25 on a flight to London. And he was wearing a pair of tracksuits and had dreadlocks. And I was thinking, the office had paid, I think, I don't know, $6,000 for my ticket to London. And I'm thinking, this young man can afford $6,000 to get to the UK in a business class. But I got speaking to him. Again, mindset at that time was, what's he doing here? By the time I started speaking to this gentleman, he told me, he said he's a musician and that he has the highest number of online sales of music. He says when he goes to do a concert, he sings 5 songs and the crowd is right in front of him. I said, how do you do that? He said, data. He says on Apple Store, he has a back end that tells him who is listening to his music, where that individual resides, how old that individual is. And more importantly, says, I know what else he's listening to. That young man is Mr. Easy. He's one of the richest musicians in Africa. He has his own label called Empower. So what I'm saying is, if you want us to quadruple or do a quantum leap from where we are in terms of retail business, there are a few things we must do. Infrastructure and data business is it. Ike talked about, his radio station listening group, that they can call you out. These are young people. They want data. They want facts. Data is the business. The infrastructure is very important. We have to remove the frictions that exist in our current trading systems or structure. My son told me, Dad, I don't want to invest in your market. It takes me 3 days to settle. He said, why will I wait and buy something today in this day? Amazon will deliver to me end of day. So why am I going to your market? It's for old people. People wait 3 days. Our demography is 70% less than 26. That's our target market. And if we're not speaking their language, we're not giving them the infrastructure for them to be with us, then I'm sorry, we should stop talking about it.
So on that point about the age of our demography, can you just speak to the, should I say, average age of demography of investors right now?
At the CSA, data shows that it's 53.5 years.
Wow. So we are really
so again,
class.
we're used to our way. The other thing is removing that friction also requires some generation correction. So we have to begin to understand who are intermediaries in this market and what should they do? What type of intermediaries do we need to bring in these 26-year-olds and less? Right. So we have to start thinking about it. What structure currently do we have in the trading ways that exist that will allow for that definition of intermediary to occur? That intermediary is important because those people use those intermediaries and you have to speak their language, provide today's infrastructure. I heard Bolaji say, among other things, the infrastructure in these 26-year-olds and below, that infrastructure is their phone. If you're not in it, forget it, you're dead. And we have to be there. And it's a winner take all. So there is no democratization of the intermediaries. Because the winner takes all mentality of the winner take all is that he will make sure that there's not only one ecosystem because he needs other counterparties to do the same thing, only that he will hold some level of control over it. And then in all of this, governance matters because these kids can call you out. For them, governance is important. And lastly, that trust building has to come back. Right. At some point, they didn't trust the way the system worked. They still have some doubts around how it is. And we need to build back that trust. If we're able to do a few of these things within the context of where we want to go, and I'm sure Timmy and I have been having this conversation since he became CEO at Advocacy, even prior to that. But it's going to happen. We need to build it. We need to build it quickly. And then that trust building will start. But we have to think about that change. And we have to be bold to make it happen. Thank you.
Thank you so much. Okay, let's move on to Mr. Afolabi now, just to give us the learnings at the DMO. Obviously, we've seen quite a few sukuks as a new product, if you like, coming to the market. We've seen some, I would say, more than relative success with that. But what's coming? What next? How do we build on that success as we try to advocate for more retail investors again coming to this market?
Thank you. When the first sukuk was issued in 2017, we were offered 100 billion. We got 100 billion and just a little above that, like 105 or 106, so slightly above the amount offered. In that first year, there were issues of normal Nigerian conversation. Oh, the government wants to Islamize Nigeria and all that. And well, the general approach to government borrowing is that government is borrowing too much. But what started to change from second year was we got the contractors to label the project. So everywhere you're passing, you are saying this road was funded by Sukuk. And when people saw that, well, not just borrowing, but borrowing that was linked to development on the ground, it was a more acceptable kind of borrowing. So the next year we saw a high level of subscription. And last year, we offered 150 billion, we got over 660 billion. So people have accepted the Sukuk because they can see the Sukuk as a driver of infrastructure. Like if you travel for Easter and you're going for Christmas, you are seeing a new road and you're seeing this road is funded by Sukuk. They say, okay, they're not just borrowing, they are borrowing productive, they are borrowing for things we can see. Yeah. And one of the objectives of Sukuk was also for financial inclusion. Now there are people that because of their beliefs and religious beliefs, they don't invest for just interest. Now, Sukuk is not for interest, but Sukuk is ownership of an asset, and the roads are actually transferred to the holders. So the government follows, as a borrower, the government follows all the requirements so that that encourages other people that will borrow using the sukuk to do the same thing. Government is subjecting itself to that discipline. So we've seen roads that have been financed by sukuk all over the country, and make sure that these roads are in all geopolitical zones. So in issuing the sukuk, the minimum amount is 10,000. That makes it available to most people. So it's not an elitist product. It's not something that only banks can invest in, or the pension fund administrators. For as low as 10,000, you can buy the sukuk. And the focus is, let's have more retail investors participate in this. So we encourage retail investors, and we've seen a lot of them. There's a plan for a first sukuk in the next 1 or 2 weeks, and we hope that we'll see more retail investors coming into that.
So really, the plan is just to build on this success and stay with it.
And getting the retail, we know that we're working with CSCS Ajalo to get, that for retail, you must have a channel that they can easily tap into.
Yeah.
Like the VP said, and Ajalo said, that telephone has become a very viable tool for driving investment. And working with CSCS, I'm making sure that the retail access to investment in federal government securities is easy. That you can just click a few buttons on your phone, and you're an investor in federal government securities. So coming out with the sukuk again, and we're hoping that we can get more retail by making it easy.
Let me come down to Mr. Famurewa. So I wanted to hear your perspective on this. So advocacy for how we can make it happen. Earlier, I think it was Dr. Samsudeen Usman that mentioned that we had to nudge the telcos to get listed. Is that still the only way? What else can we do?
Well, I think Dr. Usman was correct, but it's also the same thing that happened. If you recall, when we wanted to pass the ICRC laws, the concession, right, was also the private sector. I think it was led by the ARM team as well. There's always been this lack of nexus between the private sector understanding that we do have a very critical role to play in governance. And we always point and speak about all the problems. I mean, you seem to like the sound of talking about problems. The first responsibility is yours because you know they do not. If you look at the fundamental issue about that question which you're talking about, is that the wide gap between the state of practice and the state of regulation across the capital market value chain, it is huge. So you solve one problem, you leave a gap in the other one. You solve another one, you leave a gap in the other one. It is huge. You take it from Jalo, or you look at it from the corporate himself here, the executive commissioner, my friend, Dayo. I have attended so many capital market roadshows that I'm tired. There is no conceivable plan that's not been written. There's nothing we've said here that's not in any of those documents. There's always been the lacuna in the how and the when. In the first place, if you have a capital market roadmap that you do not make whoever is in charge of SEC accountable for or use as a performance measure, there's no incentive to fulfill it. The real challenge about listing, and you said there's been a number of listings, you have to be careful about generalization. Most of those people were asked to delist. A few voluntary move, the others were a function of mergers and acquisitions. So disaggregating numbers helps you to understand what is really going on. But then there are people who are planning to delist right now as we speak. Why? Because the natural intent of the capital market is supposed to help you raise money. But the cost of keeping you listed in the market right now is more expensive than the value to which you attract. And then the most important thing you also fail to understand is that you say there's no capital around, there's no retail market. At the last count in 2018, we had 161 Ponzi schemes operating here, aggregating close to 180 billion naira. That means the cash is there, but we haven't produced products and services that are good enough to attract the demography which you are targeting. The approaches you've had so far is been like you look at one size fits all, not disaggregating the institutional requirement from the retail requirement. And to be honest with you, one of the most powerful things I felt was while I was stuck in the airport, was while listening to the first session, I felt this was one of the best organized sessions in which people were able to talk about the issues on the market. So in closing, it is right that we just say the real thing. There is no new thing here. If the Nigerian Stock Exchange, the NGX, comes up with a major plan to move the market, I bet it will be stuck in the Securities and Exchange Commission for months. And they will be telling you that they are working hard on it. You know why? They are working with an old model for a new market. It can't work. Until you confront that and address it straightforward, it will work. Dayo came from the private sector. Sooner or later, he will become part of them. But before he does that, let us hold him down. Thank you.
Thank you very much. You know, I feel so honored to be moderating this panel because it's very straight talk. They are not messing around. So unfortunately, though, we cannot engage this further because we have run out of time. So please, if you can put your hands together, I believe you have valued this interaction as short as it has been, but hopefully we can take some actions away from this and make this market better. Thank you so much, everyone.